Do the safe thing and test the audio before we go live this morning. All right, we're good. Stock and risk on assets dropped today. Now, we can write this off as it being Friday, a natural profit-taking day, and we just simply didn't see the big desks stepping in to incentivize FOMO buying from retail traders today on Robinhood. And as a result, those traders, not seeing any large green candles to market buy into, well, they just decided to sell, to market sell, because their kind of agreement with Robinhood requires them to do the wrong thing without, in the absence of a strongly trending market to enter into. We're going to cover a lot today. The question we're going to ask today is, what would a Bitcoin rally look like? I'm talking the big deal, Evander Holyfield Bitcoin rally from these price levels. We'll look at what that would look like, what setups to watch for, and how this could or should influence your investing strategy. So join us today for a fantastic episode of Breaking Bitcoin.
I'm Joseph Abadi from Blockchain Economics, and you're watching Breaking Bitcoin.
All right, welcome back to Breaking Bitcoin, your daily source for everything cryptocurrency, trading, and investing. I'm your host, Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. I hope everyone tuning in today is doing fantastic wherever you are and however you're watching the show today. Before we begin, we're very proud to host the fastest growing online community of cryptocurrency traders and investors. Make sure to join the community and stay up to date at discord.crackingcryptocurrency.com. The link is down in the description for your convenience, and also because it's easy to copy paste stuff in there. So the question we're going to be asking today is, what would a Bitcoin rally look like? You know, can we look at previous rallies that Bitcoin has put in and get a good idea or a good frame of reference as to what we might expect to see in the future? What would be realistic price targets, midterm and long term? And how should this affect our buying strategy for Bitcoin? Also, when? Like, how long might this take? What are the timing signals that we can look for? Big story of the day is going to be Ampleforth and its surge to 13,000 on FTX. This is a new stablecoin with some rebalancing features. And of course, with the DeFi craze, individuals are just immediately to the gate to trade and speculate on this. And we're going to go over the dangers of that and exactly how a brand new stablecoin listed on perpetual futures was able to be gamed relatively so easily. Now, I want to give a update or a follow-up on something that we talked about yesterday, which is the compound token. So I thought about it quite a bit last night. Yesterday, I had jokingly said, well, somebody had jokingly suggested that what if all of us at Cracking Cryptocurrency just purchased compound at these levels and said, you shall go no further. We're going to put the bottom in on this market. Well, listen, the actual kind of collusion that would be required to a high degree of probability bottom a market out is going to require a little bit more coordination and felony behavior than we are currently putting in and that we're prepared to put in, honestly. So anyways, joking aside, compound is not in an area where I feel comfortable purchasing it or recommending that individuals purchase it. So we'll talk about that, and we'll look at the chart and we'll explain why later on. Okay, real quick mention. I tweeted about this yesterday, but I just wanted to show off some of the new silver that came yesterday. Ordered this about a week ago with Alex for Money Monday, and I don't know if you guys can see. I'm gonna approach the camera so you guys can see because it's beautiful. All right, I think this is not. Yeah, it's not gonna work. Excuse me, because of the focus, but there's a beautiful owl. I tweeted about this yesterday. Really good coin. So investing in physical metal. So quite a few of those came. So investing in physical silver or physical metal, physical gold, is a little bit different from investing in Bitcoin, for example. Bitcoin is non-fungible, which means every unit is, replaceable with another unit. This coin is unique, right? If I gouge this coin, if I mark on this coin, if I do something with this coin, that's a unique experience. I don't see people thinking about or reflecting upon their UTXO splits like a physical piece of metal or silver. So this is really good. This is the what the heck is this? This is the Elizabeth Noy $2 2020, and then on the back it's this. I don't think it's Age of Empires. That's where my brain goes to. It's the AOE 1 ounce 0.99 fine. So it's got a really beautiful owl. You guys can go on Twitter and see it. I think they're still selling these on JM Bullion's where we purchased it. So excited about that. And then went to the car wash yesterday after I checked the post and got 3 quarters pre-1964. So real good buy. Yeah, if you guys. So for those who don't understand what that means, if you can, whenever you're out and about, look at the change. Look at the change that you get. It's not as common to find them nowadays, but because there's people actively looking for them, there's a ton still in active circulation. Quarters, nickels, dimes prior to 1964 have real silver in them, and you can stack those. That's real valuable silver. So, as well as potentially in some cases numismatic value. So, all right, we've got a lot. We got a lot to talk about today. Bitcoin rallies, Ethereum, DeFi. If you guys enjoy the content, make sure to subscribe to the channel. And again, we are still dealing with, I guess, getting the backlash of being a cryptocurrency live stream. So sometimes we don't show up in feeds. So if you enable notifications, that will ensure that you are notified when we go live every single day when we post videos. And those likes help more than you guys could possibly imagine. So with that being said, if you guys got any questions, drop them in the chat. Let's get into the charts. All right. Well, we do trade on Bybit, but I wasn't ready to plug it just yet. Sorry if that triggered some of you guys. I didn't mean to come off so aggressive. Got the linked shirt on today. Maybe you guys can see a little bit clearer if I use the webcam. All right, yeah, so, oh, come on now. Don't be like that. No, you know what? I'm sorry, guys. This webcam setup is designed to do one thing very well and not multiple things very well. So it's kind of like a trading bot. Raffle. Let me know, by the way, guys, it is Friday. If you guys want me to turn some music on, keep it low, let me know as we progress. Now, who do I see in the chat? Let me give shout outs to our viewers today. All right. All right, T-Dub, Midwest Attempts, Ron Legato, Saintsy, David Rice, Crypto Jack, Mr. Unicorn, Spin B, Peckham as always, and Cruel Creed. One day all coins will be collecting items because we won't use physical money, maybe in 100 years. And one day we might be digital ourselves. I once spoke to an individual who was a humanist. This is when I was investigating the institution of humanism, right? The actual formal branch of humanism. And of course, they're very much into what do I want to call it? This transhumanism, or modifying or merging with AI, things like that. And he said, what I'm going to do when I become digital? I think I'm going to spend 1,000 years as a soap bubble. That'd be cool. And again, it's unique to my life and my experience, but that specific thought enters my brain a lot, right? When I am coming across topics or having conversations that really require me to think critically or step outside the boundaries of how I think, or require somebody to have slipped me a large amount of psilocybin. So those specific words come into my mind kind of way. 1,000 years as a soap bubble. All right. Let's get in. This is Ample Force. So we'll get to this in just a second. I want to give some comment shout outs here before we get into this. Philip Carr, Manchester Mint Crypto. This must have only been influenced, Justin, with reference to your expertise, and is a credit to the quality of your craft and intellect in motion. The end of the beginning for BTC, I reckon. So I appreciate that first part. Thank you so much, my friend. In fact, by the way, we had a great premium session this morning. Decided to hop in the premium voice chat. Ended up being in there longer than I intended. And Philly, I wanted to say, he was in there quite a bit, and you did speak a lot, which is fine. You had some really great points, good considerations, and interesting concepts. So thank you so much for being a member of our community. Definitely heart that. Mufad saying, I nailed it. Thank you, my friend. Now, let's look at things that make us think. Why not asks if by chance there is a change of government to Democrats, will there be tax increases across the board that affect crypto, especially their plan to increase the capital gains tax? That would affect anyone trading, taking more of their profits. So, yes, if the government decides to increase the capital gains tax, or for a lot of traders who are trading via an LLC, for example, or through some mechanism like that, self-employment tax or partnership tax or LLC tax, then, or, makes, like, let's say S Corp election more difficult or more convoluted or more complicated or many things they could do. By definition, yes, that is going to be less money in your pocket. This is why societies should and do eventually really react violently against proposals to increase taxation. Unfortunately, we also are dealing with late stage empire behavior from the United States in general. And that doesn't necessarily signal that the end is nigh, but it certainly signals the kind of the era that we're going into. So unfortunately, we have to be prepared for, we could go back and look at the 1800s and, evaluate, backtest America. And we could give it a lot of applauses, right? A lot of laurels said, you know what, man, you did that well. Good on you, right? Look at the 1900s, you're like, you tried. Okay, all right, did pretty good. 2000, the 2000th century, I'm really not expecting things to get better, right? Really not expecting things to get better. I am expecting to see a lot more like, I'm expecting to give the United States government, the federal government, more the kind of exasperated look that I would give my 2-year-old when she has done something. Well, actually, really, no, not my 2-year-old. Let's say my 12-year-old or my 11-year-old, when they have done something so exasperatingly opposite of what would be required to achieve their goal, and they should know better. So yeah, I mean, in general, particularly in the United States, Democrats are biased, or excuse me, it is assumed, but I think there's good evidence of this. Democrats are generally in favor of increasing taxation, and for various reasons, right? Generally, their philosophy is to generally tax the wealthy more, so that there are more funds to distribute to the poor. The problem with this is the same problem with the central bank's monetary policy in the first place. It's a problem of money velocity. Money will we just do not efficiently or effectively distribute funds where and to whom they need to go to actually affect significant social change that could ward off civil unrest. And I think that is an area where we will and can and will have to improve if you want to keep this song going on for quite a while. Classic look here. So obviously yesterday's show, we started off with a pretty funny incident where I talked for like 20 minutes and there was no audio. But wanted to give Joseph here a shout out. He said, outstanding first 30 minutes, starting to sink in. And again, let me rephrase or just refresh where I was coming from yesterday. Currently right now, with things breaking out and movements in these markets, some individuals who are approaching me and conversating with me, are of the opinion that I should be just go, just 50 monitors on every coin, looking at every movement, like this is the time to get it, because some individuals are doing that. For me, that is not how I choose to live. My investments that I have, conservatively and patiently entered into over the last 5 years. Silver and gold a little bit before that. I was a little late to the silver stacking game, and physical silver certainly late to that. But those fundamental positions that I took are playing out well, and that gives me the privilege of being able to just relax and enjoy my life and focus on my winners and not change anything that I'm doing. We were talking this morning. The analyst team was talking this morning when we were kind of getting our notes together on Ampleforth and kind of what advice to give. Like, hey, so this happened, guys. So because of that, here's what we recommend you do. We were talking about that, and one of the ideas that was floated was, well, let's recommend this strategy that seems to work. Or, one second, guys. Or what we could do is recommend that individuals trade the same way they were trading prior to all of this bullishness, to all of these green candles, and just continue trading their setups, trading their strategy. Let's be the voice of reason, where it's really a damn thing to see. I've seen this multiple times now because I've been through multiple crypto cycles with crypto YouTubers and Twitter personalities, where directional bias changes every few minutes, it seems. If there's green candles, then generally people are calling for breakouts. And this happens more in ranges like we have right now. But I mean, just go on crypto Twitter. Look here on YouTube. You're seeing, the thumbnails and the fundamental positions of individuals change like every few days, like they change their socks. And it's ridiculous. It's ridiculous. So that's something that I want to kind of caution you guys against. When you're looking for advice, you kind of want to make sure that the advice that you may receive, it's okay if the advice that you get is wrong, right? Like, it's okay if a signal is wrong. But if an individual is, talking about his fundamental position on where he believes price will go, and that is changing based on price action, I think there's an issue. All right, so thank you so much for that. Next comment shout out, give myself a like here. Next comment shout out was S180XT and Thomas Ria. Highly appreciated conversation I had with you, my friend. He says, great content as always. YouTube, please stop blocking the content. These guys are the rare solid channel out there. And again, Mufad P, thank you so much for leaving that comment. If you guys, we do not seem to be showing up in feeds consistently. So if you guys would please leave a comment on today's video. You won't be able to leave a comment while we're live, but you will be able to leave a comment after the show is done. So if you just want to bookmark it and come back, set yourself a reminder and just leave a comment that says, this show didn't show up in my feed. I didn't get a notification. I'm a subscriber. That really will help us because we're trying to build a case to approach YouTube with this. So, and then one more here on the Robinhood story that we did. Jordan Stotts, thank you for continuing to give the support to the newbies and explaining the issues out there that still need to be fixed. Your CC team is well-rounded. Thank you, my friend. Highly appreciated. All right, so thank you guys so much. On the heels of that, we did just enable YouTube memberships. So if you enjoy the live stream and you're here quite a bit and you want to help support us, you can join and receive some perks, some pretty cool stuff if you're in the live chat a lot. So we've got custom emojis for the different tiers. When you guys start, you get the CC logo, and then the longer that you're a member, you'll get new emojis, avatars, I guess, and then access to use custom emojis in the chat. And then as the memberships progress, we'll likely begin making, some special little videos for people who help support us. And the same, we need to start doing something special for Twitch subs. So this will be a very, a common strategy, kind of like comprehensive strategy. So apparently I just had to click a button or make a post to enable that membership. So, so if some individuals were waiting on that, well, wait no longer. All right, let me get my roadmap up. Okay. So after that, I want to look at the trade of the day. Kind of showcasing a good signal, or one of the better performing signals that was put out in our premium signal service. As part of our company offerings, we do provide a premium signal service. So all of our premium subscribers receive access to our premium signals for cryptocurrency markets, Forex markets, ETF markets, and CFD markets. And for the CFDs, we do cover indices, precious metals, as well as commodities. So the Ethereum USD long that was signaled, just double check. A lot of active trades, just to make sure. Yeah, so the 22nd. So prior to the close on the 22nd was when this signal was generated. Price was actually a little bit lower at that point in time. So average entry on that Ethereum USD trade was 246.90. We've already hit our first take profit on this trade. So this trade is now a runner. It's in a no loss situation for us. And let's go ahead and, for funsies, use a little bit of see, there needs to be a... All right, so give me 1 second. I'm pretty sure there's a way to do it. No, shift click's not going to work. Clone copy. Create a group of drawings. What do I got to do? Control click? Shift click? Nah, it's just not going to work the way that I want it to. All right, so all right. So let's go back to the roadmap chart for Ethereum on Bitfinex. We were consolidating in a rectangle formation. We did a measured move of that formation, which was 264.08. That is a 1-to-1 movement. All right, so let's continue to move back here. And yeah, that's really the only appropriate trade setup that I see here. If we do want to push it, let's measure. Again, the way that you measure a target or a rectangular top or bottom is to measure not from the high to the low, but from just support to resistance. As you guys can see, we did hit that one. I guess that was actually a 786, wasn't it? So actually the one would have been a little higher, 267.40. So we did hit that target. But the actual target, just so you guys know, the actual target was generated by Quadriga, which is our profit and stop loss indicator. So we've made a 1.618 movement. So we've already made a greater than, we've already outperformed the range of the consolidation area, which seems to have been reaccumulation. Let's see here. We're getting what kind of looks like it's not, right? It's not a hanging man candle. It's just a doji, right? It's not really indicative of anything. It's indicative that price is slowing down. But this doesn't really look, and again, I don't like trading like this, but this doesn't look, at least for Ethereum, kind of like the reversal that you might be looking for, right? So Ethereum's still pushing forward on a little bit more strength than some other assets today, while we are seeing general red across the board. All right, so good trade. Happy to provide that signal for the premium members, and hopefully individuals, a good quantity of individuals were able to take that trade. So currently that is up 9.90%. And let's see, it was 20% of my equity. So that is almost a 2% growth. So it's a good lick. So anyways, let's move to next topic. Let's break down Bitcoin as we usually start off with. So again, we're going to look at some long-term fundamental indicators here today and talk about how to evaluate them and interpret them and attempt to get some roadmap for what would a Bitcoin rally look like if we really did get when we really do get this next large parabolic movement and this this very pronounced bullish trend. What should we be watching for, and ultimately, what are some good price areas to have in mind so that we can operate with them? So there are quite a few of these fundamental indicators. So the first one that I want to look at is the Powell multiple, which is available on Glassnodes. So we're going to pull up Glassnode Studio here, and this is going to be under indicators, the Powell multiple right here. So just to read their own description of the Powell multiple, it is calculated by dividing the daily issuance value of Bitcoins in USD. So how much dollar value was generated by mining Bitcoin in one day. So you take that number and divide it by the 365-day moving average of that value, right? So you're taking an average of itself, right? So it's a second layer. It's a second layer derivative. This metric was created by David Powell, and there is a pretty long and extensive article that explains it and why it is utilized this way. So it's a very, drop the link in the chat. So let's just look at the Powell multiple. Let's look at the Powell multiple all the way back to as early as it will stretch, which is 2012. So the Powell multiple, the way this works is it's a threshold indicator. When the Powell multiple, which is the orange line here, crosses into the green line, the common philosophy here is that this indicates that we are in an accumulation level and that buys are going to be rewarded. And if we're in a red area, if we're between, so let's put numbers here. The green box appears to be, the accumulation area, appears to be between about 0.3 and 0.5 on the Powell multiple. Whereas the distribution area, the area where price is should be sold and should be looked to scaled out of, is between 4 and 10. All right, so again, tops are generally far more violent than bottoms. So the simplest way to utilize this is to be more comfortable or to consider this a tool in your tool belt when evaluating whether it is a good time to accumulate a long-term position on Bitcoin. As you guys will notice, we are just emerging from the green Powell accumulation box now. However, we took quite a bit of time this morning, and I have done this before, looking into this more and seeing a little bit more what's behind this. Like how could we actually trade this, and how reliable is this? What are the nuances? What is the context of the market in which these signals are generated, right? So the first thing that I looked at was the correlation between the halving or a halving event and these accumulation zones. So the let's see here. Let's pull this up. Oh shoot. I pulled this up on a good Google search here. Second, let's see, Bitcoin. It's probably in this Investopedia article. Just want to have the exact dates right in front of me. They listed them all nicely earlier. Oh, you know what? I'm being silly. It's on the hash ribbons indicator. 2012, 2016, 2020. Yeah, there we go. Okay, so November 26th, November 2012, I believe. 26th of November 2012. So let's go back to the Powell multiple chart. We can see that the 26th, 2012, is right about here. Right about here, and that led to a pretty significant sell-off and then a large rally. So we had entered into the accumulation area about a year prior to that. This is November of 2011, and we had the halving on November of 2012. So about a year, almost a year prior to the actual halving event was when we entered the accumulation zone. Remember that, because that's going to be important moving forward. All right, so our next halving is in 2016, January. Let's see. Excuse me, July 4th. July 4th, 2016. July 4th, 2016, which is going to be right up here. July 4th, we can see July 4th occurs, the halving occurs right here, leads to a very large sell-off, and then price rallies. And so we entered the accumulation zone around January to February, mid-January to early February 2015. So about 18 months prior to the halving event. Okay, so we entered into accumulation phase a year before the halving the first time, and 18 months before the halving the second time, give or take. Now, the last time that we entered into the Powell accumulation zone was at the depths of the March not at the depths of the March meltdown. This was, December 2018. December 10th, toward the middle of December 2018. So, of course, we had our halving on May of 2020. So this is about that, roughly about the same time structure. So starting to average out to somewhere between, let's just call it like 13 to 16 months prior to a halving, we will get the Powell multiple signal, which would indicate, with the exception of this current price action, and we haven't seen the outcome of the halving yet, really, one could say, that halvings historically mark selling points in the market. And about a year prior to the halving is when one is best served to enter into a position. Now, the other thing that I want to point out about the Powell multiple, and we're in the Powell multiple right now. So you might be thinking to yourself, well, look, every time we've come down here before, we've taken off. So this is most likely a good time to buy. And it certainly could be. But I do want to point something out. Every time that the Powell multiples come down to the accumulation zone, it's not satisfied with going halfway. So let's zoom into the first one right here. And as you can see, I want you guys to pay attention. Here's how the Powell multiple is displayed on the chart. There's this upper range, lower range, which appears to be, if I'm looking at the scale that is presented to me, about 0.3. 0.4 appears to be about in the middle, and maybe like 0.47, 0.5 maybe represents the top. Let's just call it 0.5, 0.4, 0.3. Keep things simple. So we can see here that when price in 2012 first enters the Powell accumulation zone, it does bounce off the midline there and exits out of the green accumulation box, but it's not satisfied. No, it then plunges down all the way to the bottom of the box and actually double bottoms before continuing off on its rally. So let's look at the let's look at the buying opportunity in 2015. Here we go. So something relatively similar here, although not as extreme. We can see that price comes down and starts trading into the green accumulation area. Puts in a little bit of that's actually kind of more of the same, right? We don't get all the way down to 0.4. But price is not satisfied here to just kind of touch into there. Now we collapse all the way to the bottom. Collapse all the way to the bottom and form a higher low, and then we're off. Now let's look at the last two buying opportunities. All right. So same thing here. Let's get in on this. Whoops. So as we can see, price comes down a little bit below that 0.4, and price begins to move up, but it's not satisfied. It pulls right back down, hits the bottom. Okay. Now let's look at where we're at right now. Okay. So price has twice come down to the 0.4 level and bounced off. We have yet to see a movement to the lower area of that range. And it was in the process of measuring out the typical average movement following these bottoms. So I'll come back with that information on Monday, and I'll post it up in the premium group. So and then the correlation between this, by the way, and the halving 2012, there wasn't a price correction. Price just moved up following the halving. But with regards to the price of Bitcoin, the year or 18 months prior to the halving, when price entered the Powell accumulation zone, again, on average, price had about a 30% correction. So on average, price had a 25 to 30% correction following each fake bottom. So every time price came down to 0.4, tested it, appeared to be climbing off of it. Nope. Price turned back around eventually and moved down. And that's 25 to 30% from that fake bottom. So if you've actually moved up from that fake bottom, you've got further down to go. So if history repeats itself, then we potentially are looking at a 30% correction on Bitcoin from 9670, which I did the math on a little bit earlier. It's right around the $6,900 area. So something to keep in mind. All right. So interesting chart. It is possible. So one takeaway, and this is what Philia pointed out. What I want to leave you guys with is what's the context in which these signals are generated in. January 2012 to let's just say January 2019. So these three Powell buys, we are in a global bullish macro environment. And in March of 2020, we had a significant global market meltdown and a potential shift in direction of the trend. And regardless of the bull rally that we're currently having, it's possible that we are not in a bull market, philosophically. So it's the correlation might be bending, right? So for example, when you're doing your back testing, this is just one more advanced concept to consider. Back testing works great, but you might notice that over time, or maybe in certain markets, your strategy does not perform as well as you feel it should. Now, generally, we have a process for this. We test what markets to trade. So we evaluate this over time. And if we discover underperforming markets, we simply remove them from our active market watch list, and we look to replace those with markets in which our strategy is currently conducive. Now, sometimes, depending on how long you backtest, you might have optimized your strategy a little bit more for a global macro environment or a bullish wider market sentiment or bullish trend. And again, 2012 to 2019, roaring bull market in the SPY. Price just went up. So because we might be potentially at the beginning of a new trend for these markets, for global markets, for the next few years, the correlation might be changing. We might have to revisit these. But if we get the historical power here, then we are looking either at the bottom or potentially one more correction before the bottom. So either way, accumulation now and 1 year prior to the halving. So if you wanted to be a little conservative looking at this chart, you could say, well, I'm going to buy some Bitcoin now. I'm going to buy some Bitcoin when we stab down the Powell multiple to 0.3, and I'm going to buy 1 year before the halving. Strategies for success. All right, now let's go back and look at the BLX index, and let's look at the power law corridor. This is a simple and popular indicator that measures out the corridor that Bitcoin's price trades in. Let's look at see if any notes in the source code here from Capriel Charles. He says, based on Bitcoin's natural long-term power law corridor of growth by Harold Christopher Berger. Let me Google that real quick so I can get the link. Here we go, and I'll drop this in the chat for you guys. This is a good article. Okay. So the way that this indicator is utilized is fairly simple. We have three. This is also a threshold indicator. So we have three levels. We have our red level, which clearly indicates resistance here. We have our white level, which indicates the transition or the shift or the movement from bullish trend to bearish trend, or accumulation area into distribution area. And then we have the green line, which represents the potential bottom of the market and when price is oversold. So let's just briefly back test this on the weekly. We start off with an area that I think we could ignore because this is back at a time when mining was struggling to even get up off the ground. But as we can see, the first time we cross on the weekly above that white threshold, we get faked out immediately, and pretty much the second time as well. We do have one decent weekly candle and a pullback back down to the green line, and then finally we get a nice trend. We stop, we turn around right at the red line, all the way back down to the green line, put in a nice rally, and faked out on that white line, pull back, rejection, pull back. One thing I want to point out is going back to the beginning, when we close below the green line and then back above, we never close back below that green line. And so if that was your metric, you would have caught all of this potentially, depending on where your exit was. And it's the same here. Here we see price close below on this candle, closes back above here, and you have a beautiful rally, 155%. Same here, price closes below, closes back above, beautiful rally. Now things start to get less attractive as we proceed into 2015, where there's fake outs there, and 2016. But one thing we can notice about these fake outs is that price is moving up consistently to the 2017 rally that took us to the top of the range. Price has come back down to the bottom of the range and double bottomed on it. We closed below on the 9th of March on that March Meltdown candle, closed above, have not yet closed below. And again, already had a 60 to 70% rally. So obviously different ways we can use the power law corridor. We can utilize it, and what we're going to be utilizing it for is giving us an idea of really, if we just get really bullish here, what is a probable price target? Now, it's easy to say, well, I think Bitcoin could reach 100,000 or 200,000. Listen, everybody says stuff like that, and it's based on absolutely no fact. There is, excuse me, there it is. There's no difference between saying, well, I think Bitcoin's price could be 100,000 or saying it could be 1 million. I see very, very, very little tangible evidence to support specific price targets that are grandiose. You can sit here and do this about any chart, any time frame, any market. Yeah, man, you don't understand. This coronavirus vaccine is going to be huge. That stock is going to just go up and up and up and up and up. Whatever. But the power law corridor is something that has performed with some good historical results here. So let's use that value, which is 66,441. That is from current price. I'm going to measure a little sloppy here. But that is about a 584% gain. Means, I wish I could. I like to do this stuff on the calculator so I can show individuals. But Every dollar you invest into Bitcoin is going to be worth $6.84 when we reach overhead resistance, essentially. Right? 4% to the center, 591% here, and support is about 29% away. Now, as I said, just visually backtesting this on the weekly, we got a lot of fake outs on crossing that green line, and as price proceeded into 2015, we got quite a few fake outs on the green line as well. So I would be a little, again, as with all things, there's nothing magical about this indicator, right? It's just using a simple equation to measure out areas of the market. And Bitcoin's price seems to be naturally obeying those levels. Billy made a good point earlier that there are a lot of combinations here. Individuals want to buy when the price of an asset is lower. Bitcoin has been bullish for the last 10 years. Individuals have always looked for opportunities to buy into it. So before we take this, before we use the Bitcoin power law corridor as an initiator, first off, backtest it. You guys have the skills and tools to do so. But I wanted to utilize it to establish a good profit target, as well as what's the likelihood that it's a good time to buy Bitcoin, or what's the likelihood that in the long run you would be rewarded for investing here. Well, there's some good indications that you'd be rewarded for investing here. Investing or purchasing Bitcoin when price is in the green zone does reward you historically if you're patient enough, right? So every individual who bought a previous market top in Bitcoin, if they were patient, eventually were able to sell their position in profit, and quite good profit at that. So if you are holding on to positions in Bitcoin, talking about Bitcoin, that you opened up at price levels that you shouldn't have, so prices higher than 12,000, 13, 10,000, all you have to do is be patient. It's not all you have to do. You have to do a few more things, but okay, so let's also look at, there were quite a few of these. So I'll look at the other indicators that I wanted to look at were the NVT signal and the hash ribbon signal. So let's go ahead and just look at the hash ribbons. And I didn't get time to evaluate the NVT signal. So we'll do that on Monday, or we'll do it kind of with the group over the weekend. All right, so let's look at hash ribbons, what's going on at the daily. And again, this is the BLX. This is the Brave New Coin Liquid Index for Bitcoin, so we can get some good historicity. We do see minor capitulation here on the BLX index from roughly the end of May until the 24th of June. And then the buy signal was just generated on hash ribbons over here on the 12th of July, 2020. I responded to Capriol when he tweeted about it. Yeah, so let's see here. The hash ribbons indicator generally performs in backtests well. So I would say, but it's not without its corrections as well. But again, tends to backtest relatively well. So there are some pretty good signs here. The way I'm interpreting this, right? So let me explain the way I'm interpreting this. We didn't get to look at the comprehensive list of everything that I wanted to look at, but what would a Bitcoin rally look like? Well, a Bitcoin rally would probably look quite similar to 2017. We're already seeing that now. So at areas of the market like this, and I've been very consistent on this. This is an unattractive area of the market for me to trade. If there is going to be a pronounced bullish trend in Bitcoin, similar to what we had in 2017, we are going to have plenty of time to enter into a trade. You do not have to buy an area that you're uncomfortable with. You do not have to buy an area that looks like it could be either distribution following a massive rally or reaccumulation and weekend distribution before a continuation of said rally. So be cautious. I think that individuals getting really directionally biased here are way over their skis. We talked about the probability of 30% corrections, and those 30% corrections don't necessarily have to invalidate a signal like the hash ribbons. And again, let's talk about that other concept that we raised, which is the context, the market context of previous signals on some of these indicators might be different now because of the stress put on the financial markets in March and really continuing in the back end till today. So on Monday, we're going to continue talking about this topic. So we're going to talk about more in-depth price targets, consolidation areas, profit-taking methods, where throwback would likely occur in the markets if we did get a bullish break, and what to look for to see if that trade setup has been invalidated. All right, so let's go to the spot chart of Bitcoin, and then we'll look at the CME chart. We talked about Donchian longs potentially being signaled over here, or actually not potentially, but being signaled with the Donchian system on the 22nd of July, 2020. Okay. Wait a second. Okay. And when that trade was generated, right here, when that signal was generated, we had take profit targets of 9801, 10,045, and 10,289. So relatively conservative signal. Now, I am not in an active Bitcoin position still. The reason why is because I have too much long risk on in the first place. And again, I don't have to enter into trades that I don't feel comfortable with, right? With regards to Bitcoin, certainly the best practice here is to take the trades that a system generates. However, the longer that you trade a system, you will be comfortable disengaging from areas of the market where you fundamentally feel this is not probably going to be conducive to my trading. Being conservative does not hurt you, right? Because being conservative, not really being conservative, you can be aggressive. There are times, listen, individuals sometimes get this false impression that because I constantly talk about position sizing and have developed all these tools, and it's one of the things that I love to talk about, risk management, but like I take very small positions. Well, most professionals do tend to take smaller positions as they continue to trade because they are more into reducing their risk than making money because they're already making a good amount of money. And that is generally true for me as well. But because I dynamically adjust my position size based on a stop loss, there are times I will take very, very large position sizes relative to my capital, particularly if I have access to margins. So it all depends on stop placement. Everything is dynamic. All right. Let's see here. So the stock and risk on assets dropped today, as I said, having a pullback. Friday is a natural profit-taking day, and we just didn't simply see a lot of big traders stepping in, but we also did not see a lot of trend exhaustion. So we're going to look at some altcoins here in a second, but the thing that I want to look at is, again, we see weekly consolidation. Let's go to the roadmap chart here for Bitcoin to see where and how we're trading. And this is exactly what I talked about yesterday, being hesitant to enter as we were nearing and trading at long-term resistance. Now, this is really the last resistance that Bitcoin has that I would consider like relatively significant, right? It's been a journey to get price to trade fairly back up at the previous swing or point of control. Depending on how far you go back, the point of control is either going to be at the lows or it's going to be at the $6,000 to $7,000 range. And again, the formation that I feel most comfortable with, that seems the most likely to achieve profitable results, is the rectangle formation. I have more success with those than with encompassing diagonals. So a measured move for this range to break to the upside is going to be 11,327 initially. And a break to the downside of 7,283, which I think is fine. 7,283 is, by the way, very close to that 6,920 target that I calculated by measuring what would price be if we did experience an atypical 30% drop from the previous low in the Powell accumulation zone. So, as we can see, price did come up on a Friday to overhead resistance, diagonal resistance stretching back to the high of 2017 and the high of 2019. And price is currently stopped here. So I think for individuals that were trading the kind of the meso movement here, I think this has been a relatively good long that you've entered into if you took the breakout trade on something like this descending channel. And because of all the white space in this descending channel, I'm not really expressing a lot of conviction in this descending channel. It's not really the way that I trade. And when I do trade formations, again, there are patterns that I favor. They're not descending channels, but I wanted something to talk about. All right, and again, as prepared as I am for the bearish scenario here, my macro analysis still hasn't changed. It is more likely that Bitcoin is reaccumulating before another phase of markup. Having said that, though, reaccumulating before markup does not preclude a pronounced pullback. And one thing, guys, listen, can I ask a favor, please? I would really like it if everybody could remove from their vocabulary the terms, well, Bitcoin might move down to like 6 or 4,000, just real briefly. It might wick down there before continuing up to 20,000. If something like this ever comes out of your mouth, I want you to just go into the bathroom, look into the mirror, and repeat those words back. And then come look at the chart of Bitcoin historically and ask yourself if that makes any sense. It doesn't. Price does not just, okay, so sometimes it does, but very rarely. Price generally does not just like commonly wick down to allow individuals to get that last minute buy. You know, you only get one chance to buy the bottom of a market. It's one chance. Everybody gets one in their entire lifetime. GB Wally, good to see you in the house, my friend. All right, so let's look at altcoins here. Let's look at something we can actually take advantage of. Loading up crypto bubbles. Pretty decent sea of, I would argue red overall, or that's certainly how it appears to me, with some pretty decent outliers. And the amount of outliers does seem to be rising from this morning, which is indicating that some more risk on is coming into altcoins. So although it might be a boring weekend for Bitcoin, it might be another exciting weekend for altcoins. So let's look at Digibyte. This morning when I was looking at the charts, it was the only legitimate coin, I would say, that was up amidst a sea of red. And look at this red. It's not big red. It's not double digits. It's single digits. This feels like altcoin pullback territory. Doesn't necessarily feel like trend flip. All right, so DGB. Let's go to. Let's replace GX chain. We can now. Okay, so let's do DGB USDT. All right, so we're on Bittrex here. Let's go to the weekly. All right, so double bottom that led to a 60% market movement and then a downtrend. A V bottom here. This is a turtle pattern. And then a nice breakout above that resistance at about 0.7 of a cent. All right, so Digibyte has moved up, has had a 200% movement, consolidated in almost a 40% range, higher than 40% range, and appears to be breaking out. Let's take a look at this. All right, so we do have the characteristics here that might indicate a bubble top. That is certainly where price seems to have gone and stopped. It's also where, following this kind of initial listing of DGB, we accumulated here, like people, 2018, it was September. We all did things. We don't look back upon with much favor. And for some individuals, buying Digibyte at about 2, almost 3 cents was one of those things. New asset lists on Bittrex. I think it's going to be great. Tell all your friends about it, and then your friends stop coming to your barbecues. All right, so we have just marched our way back up to that resistance level. So that is the level I think to watch, 0.026. See if we can get a break of that. Let's look at the daily and look at more active trade setups here. Yeah, these are the charts that I don't like. And I'm not saying that there's not money to be made here, but I can tell. I know charts where I look at it and I'm like, I'm not gonna get anything on this chart. So we've got a little bit of, kind of I don't really like this white area here. I would like to kind of see this play out, but almost like not a broadening, but a kind of a contracting. No, I can't make an argument for it. Like a receding or contracting channel or wedge. No, it's kind of forming that deuce bigelow male gigolo pattern. Yeah, forming that deuce pattern. So potential double top. Watch for the break of 0.026. Let's see what a PTP system would have done with this. All right. So the 26 Donchian was pretty sensitive in this area. Let's see here. Got us in. Let's just look at the recent rallies. Got us in for this trade here. And I need to, excuse me, when I'm looking at the daily for altcoins, I need to change this to 30. Right? All right. Otherwise, we're just going to get inundated with sell signals. All right. So did well at this area. We ended up selling on a failsafe here. Probably certainly hit our break-even stop loss, I think, honestly, on that after taking some TPs here. And then re-entry into the trend here. Great trade here. And continuation trade right here as well. Right, for that trade. We don't take that trade. We get negative here. And yeah, we are generally precluded from trading. Let's see here. No. Make sure that we get faked out here. Yeah, we did get faked out here. Trading the Donchian PTP system here. I would have gotten you faked out, but not here and not here. Pick up there, and then the entry here, which would have been a decent trade at about 12% profit, and I see us getting that continuation signal on yesterday's candle. We've had about a 7% movement. So as of yesterday, as of yesterday, we'd have been looking at like, yeah, entry at about 0.0248 and looking for 0.0267 to 0.0304 with a stop at 220, which I like. Basically at the bottom of the candle. So you're really looking kind of for that push up breakout. Again, not a trade I would take because of the level of resistance at which we're currently trading at. And I do think that this is very, very clear historical resistance for Digibyte. We can break above it, then we can continue to enter into positions or look for justifications there. Looking at this chart and taking the Donchian off, what I would target is a pullback, about a 25% pullback here to the 0.0195 level if we're going to form another higher low, which would be good to see. All right, now let's talk about comp. Guys, I'm sorry. Let's talk about comp. Comp is an extremely bullish, or, yeah, let me say that with a straight face as we look at this chart together. Compound is the most bullish chart I've seen. Look at this chart, ladies and gentlemen. Can you imagine not buying Compound at 156.20? The legends your children will tell of you one day. Look, I don't feel that way. There are some, very short. There's some there's just a lack of historical data here for me to have a competent edge in technical analysis. Now, there are other edges we can have besides technical analysis: information, ability, or speed, capital. There are different edges in the market. Ours is filtration and identification. We are very efficient and good at identifying trends, and we are very good at filtering out losses. We're very good at filtering out negative signals or false positive signals. Compound has been a massive L for individuals that purchased on the on the Coinbase listing, and price has fallen just roughly about 30%. This might not be the pullback that you're looking for, right? When I really took the time to look at this chart last night, there's some opportunity here. Again, as I said yesterday, small position here might not be a bad idea, but I just do not feel comfortable just opening up the floodgates and putting in a whole week. Like, remember, I discussed this concept in strategy with the premium members on Wednesday. These are trades that lock up a lot of capital, sometimes for years. I'm not going to do that with compound above $100. Talk to me when compound's under 50, and we don't even know like what's the fair price of compound. So I just wanted to touch on that because I know some individuals watch the show and they'll hear me talk positively about a chart, and that's a buy signal. Now we're going to be talking about Ample. I can't remember who recommended that purchase. Somebody was bullish on Ample yesterday, along with UBT and Beam. And I want to kind of run down the list of charts that I was interested in that I think have potential. Band USDT. All right. Again, we're just going to assume. So for the next few charts, assume that everything that we're talking about is predicated on the market continuing to trend. So we're going to identify entry opportunities. Is right now an entry opportunity for this chart? No, it is not. No, it is not. Excuse me. Let me change that. 30. Just getting flooded with sell side signals right now. That's okay. So band USDT signaling this market top really well. Told us to get out of the trade here. So we did miss out on, unfortunately, 70%. But it did give us, let's see, it gave us 40. If we would have exited all of it, yeah, we would have missed out. But we could have got, and again, I haven't adjusted time transformation to this particular market. 134.44. And again, some individuals are not going to be utilizing, well, hundreds of individuals aren't utilizing time transformation as their exit in that particular. But anyways, BAND USDT. Let's look at the baseline here. So potentially watching the $3.30 area for a band USDT pullback if we are going to form another higher low and continue on. QNT USDT. Come on now, guys. All right, so I guess we got to do QNT BTC. My bad. QNT BTC on the weekly time frame does look relatively attractive. We have traded back up to previous resistance. Not a lot of historicity on this chart, but again, traded in a pretty volatile range. QNT has and a 500% range or greater. So while we are not in the atypical purchase zone, which would have been down here around 3/100ths of a cent, we are putting in some characteristics that we might have broken resistance and are consolidating above resistance. As we can see, we are consolidating above the weekly baseline. We're not overbought yet. And dynamic money flow on the weekly has just gone positive on this asset for the first time. So again, not a lot of historicity. I don't want to place all the faith here, but let's look at the daily. We are potentially going to be getting a signal over the weekend. So QNT one to watch. NMR. I think NMR is pretty interesting here. I do like Numeraire for what they're attempting to do. And we have had a pretty decent pullback on NMR and an increase in sell side volume lately. So looking for coins that are currently or have already completed their pullback, giving us an opportunity to re-enter. So not enough information here for weekly analysis, but let's look at the BTC pair and see what we can see. So we already have begun trading to the downside on this trend, unfortunately. Let's see here. On the daily, another low. So I'm going to be watching NMR. I'm going to be kind of watching for that sell side spike. I'm actually utilizing not these indicators. This is an example of a PTP system, not the PTP system I'm using on altcoins, for example. As you guys know, this is the system that I use on Forex and CFDs. Let's see here. Algo, also one that's pulled back more than other assets right now. And I think Algo is, it continues to be quite bullish. We just had a nice pullback here to the daily baseline. We do have an opportunity right now for what I generally call trend exhaustion reversal baseline bounce trades. These trades generally take us back up into the distribution range, not all the way to the top, although sometimes we do double top and sometimes we even sweep and put in a liquidity rate. But in this case, generally looking for price to go back up into the initiation of selling zone, right? Which, as we can see here, is right around 35 cents. So price is currently at 32, and I think algo is looking good for about a 9 to 10% trade back up based off that reversal baseline bounce with good R to R. A few other coins here that caught my eye that I consider less risky: Lend, HBAR, and ZIL. Coins that are a little more high risk are CKB, Ontology, and Digitex futures. All right, so followed up on comp, not the right time to trade. And then we're going to talk about Bitfinex here in just a second. Let's see. So let's take a quick chart request. Any coins worth 1 Satoshi would be great value. There are coins worth 1 Satoshi. That's kind of like, I think that's kind of like a slot machine, right? So, you say to yourself, like, well, once a week, I'm going to buy $100 worth of a coin that's worth 1 Satoshi. Yeah, that works. I'm going to turn this brightness down. It is atrocious. All right, don't freak out, guys. I'm going to turn purple. That's not going to work. Gotta get my... Here we go. Let me know if I'm a little too red. I want to be all trumped out. I want to be bleached, though. I just noticed something about the lighting. It's not quite good today. All right. Let's see here. All right, I see LBC and OGN. Let's take a gander. All right, LBC, library credits. All right, let's look at the weekly time frame and establish kind of where we're at with LBC. And then we're actually going to take these indicators off this process. All right, so let's establish a roadmap for library. See what levels were significant before and what levels are significant now. All right, got a clear top right here. Strong resistance. Weak resistance. Down into this. Ooh, we've got resistance here, not support. Okay, I got the market bottom here, and this kind of like little baby level of resistance here. The weekly chart actually doesn't look too bad. We are in an accumulation range for LBC BTC based on the historical chart data that we have available to us. Let's see here. We've put in a double Eve bottom formation, so there is this potential that we can move in this range and complete a measured movement if we take one. An Eve pattern here, a nice half circle bottoming pattern. Some people might make the mistake of calling this cup and handle. It's not. It is a double Eve pattern. So the way to measure a measured movement for a double Eve pattern is to measure from the lowest point in an Eve the highest point between the two Eves. And then you start your neckline and you measure the breakout from there. All right, so a one-to-one measured movement would be placing us back up a little bit underneath previous resistance around 1,001 sats at 825 sats. Being a little bit more conservative, the half move to the 618 would be 627 to 674. That's usually a good discretionary area to set initial take profits. Let's just feature like this. All right, get rid of that. Okay, so based off a potential bottoming pattern and assuming that altcoins will continue bullish and considering the fact that this has already had a nice test of resistance charged above it, and this is not throwback, this is a busted pattern, but there was no pattern here to trade essentially. And we've had a nice pullback here. We've had a nice pullback here to a previous level of resistance where the market turned around here. Really, you can see this is a test for liquidity, but that test for liquidity indicates that there are market participants here. So I kind of like the weekly chart actually. Now let's look at the daily and see if we've got a trending entry. So not on the daily yet for BTC. We still are in a bearish trend per the Donchian. We did cross above the zero line, generating a centered oscillator signal 2 days ago. However, dynamic money flow is still negative. Let's see here. True Strength Index just crossed over today. So I would be watching for a signal from library credits to break above 319 sats, where it's currently at 284 or a little bit more. And that's a 10% movement to the upside. That's fine. We're going to be looking for a trending initiation trade on the daily for LBC, excuse me. And I'm actually going to keep my eye on this one. I kind of like this. I tend to start paying attention when, because this is the one that I normally trade. I almost never trade on Bittrex anymore, but I'll put capital on there for opportunities. So I do like the TSI crossing over here in conjunction with the weekly. So I quite like this chart. Okay. And then somebody said OGN. All right, OGN USDT in a reversal baseline bounce area, but I do not like it due to the lack of volume. Let's go down to the 1 hour and see. Yeah, not a big volume spike. I think this is going to continue to slide, actually. I think this is going to break support based on the lack of volume. We see the same. I mean, we see the exact opposite. Where does price turn around? There's big increases in volume. So we can see a consolidation range, most likely a distribution range, play out here on low volume. And we can see the volume come into the markets on highs because people are trying to buy a breakout on OGN. And they are buying individuals attempting to sell their positions. So no signals here. This chart is not valid to short, although we wouldn't. I think you can short Origin on Binance Margin. A dynamic money flow is positive. True Strength Index is positive. And time transformation is actually hinting at longs. So the only thing that's, so you know what? This actually, per the system is like not a bad opportunity for a reversal baseline bounce. You've got, so little to go. It's like a 2.5% daily close for you to be invalidated. So you have a reversal baseline bounce opportunity here. The other thing that one can do is, as we can see, we are not in an active trade right now, so we'd be watching for a continuation signal from our initiator here to get back into the trade. Let's look at OGNs, and not a whole lot, sorry. Yeah. And prices come back up to weekly resistance. So area to be cautious at, because again, betting on breakouts is generally an underperforming strategy. All right, let's switch over and see where we're at. All right. Yeah, sorry. So let's go over here and talk about a few things real quick. All right. You guys can see me. All right. So before I forget, how could I forget? Today's show, if you enjoy the analysis, today's show is brought to you by the Cracking Cryptocurrency Premium Trading Group. It is one of the great pleasures of my life to share my knowledge, to share my experience, and to allow and create and foster an environment where others can do that to the best of their ability. The conversations that I get to have with the premium members, not only in chat sessions in the members lounge, in community mentoring, and in one-on-one mentoring particularly, it's a very positive factor in my life. And I see the positive factor in others' lives as well. Not only are individuals learning to trade better and being held accountable by their community, but they're also, they also get the opportunity to contribute themselves, right? And give a little bit back of what they've learned. So if you guys are interested in learning, if you guys are interested in improving, and something I always am, in improving your trading strategy, building your own objective trading system, utilizing our premium indicator suite, or taking advantage of our premium signal service, in addition to our online trading academy and mentoring, make sure to check the link in the description down below or the banner at the top, premium.crackingcryptocurrency.com. All right, because we kind of went long in the tooth there, we got to plug more awesome stuff here before we get into the crypto currently. So if you guys, some of the best trades that we've had this year have been utilizing margin. Now, I want individuals to be trading responsibly. I do not want individuals engaging in complicated contracts that they do not understand or utilizing dangerous levels of margin. However, the responsible use of margin does help you reduce risk. And the platform that we choose to reduce our risk on, take on risk, but utilize margin the most effective way that we can is Bybit. It's, I rarely get jazzed up about exchanges, but the switch from BitMEX to Bybit was, for me, a very positive experience. Now, don't get me wrong, I've made a killing off of BitMEX over the last several years, but it was sapping my soul away. So don't have your soul sapped. And I also think FTX is a pretty cool exchange. So is FEMEX. But for newer traders, it might be too much, particularly if you're trying to learn how to use leverage or margin for the first time, and you're finally on an exchange where you're not getting just fleeced because you're taking margin on these altcoins. Just FTX and FEMEX might offer too many complicated and risky contracts for newer traders. Whereas Bybit, you have Bitcoin, Ethereum, EOS, and Ripple. Pretty simple. And then the BTC USDT contract, which is actually my favorite contract to trade. So if you guys want to get if you guys would like to make the switch and you want to receive a $50 margin bonus, you can't withdraw it. Don't get super excited, but it's free money that you can trade with and make money. You can utilize the link in the description, bybit.crackingcryptocurrency.com. Now let's get into today's cryptocurrency segment because there is a lot I want to talk about with regards to Ample. Let's go. All right. So, there is a DeFi related token that you probably haven't heard of unless you read the news headlines this morning. And that is a little token known as Ampleforth. And it has generated quite a bit of buzz over the last few weeks, but what DeFi project hasn't? Because it offers annual staking rewards. And it's a stablecoin. So it's managed to capture the attention of new investors that are looking for the next big DeFi project, the next addition to their yield harvesting strategy. Now, the native token known as Ample, sorry, I've got to put my glasses on, guys. Apologize for the ghost lights. So their native token is known as Ample or AMPL. It's designed to be pegged at roughly $1 per token, but massive inflows of capital have recently caused its price to rocket well past their stablecoin peg. Earlier this month, Ample climbed as far as $4 in trading on certain markets. Now, one reason for this is it has an internal mechanism to keep the price stable around that $1 mark. So the token automatically rebalances itself daily by adjusting its circulating supply by a large amount if necessary. So since it had this unnatural move to $4, its price has been finding equilibrium. And price began cooling off back towards its natural level of $1, its intended target. And that was until yesterday, when an Ampleforth futures market was opened on the growingly popular crypto trading platform FTX. And this caused the wildest price swing to date for Ampleforth. So let's look at all right, so let's look at the actual contract details here for the Ample futures contract. This is the official listing announcement from FTX, which notified users on the platform how the Ample token was going to be, how the Ample listing would be conducted on July 23rd. And how they're going to go about pausing. So they introduced this concept of pausing the market in order for the Ample token to rebalance itself. Right? To rebalance its portfolio on a daily basis. Because again, this is intended to be a stable coin pegged to $1. And the coin's internal mechanism rebalances the existing supply on a regular interval. And that allows them to have this kind of novel mechanism to offer price stability. Now, so in this regard, FTX listed Ample on a spot market. This wasn't something that anyone questioned. And instead, what users were excited about was that this was users could have just been excited that this was coming to another high profile and high volume exchange. But FTX also listed Ample for futures trading under their perpetual contract. And this was really confusing. Why would they do this? This led some to wonder how this would be possible considering the coin's elaborate underlying mechanics and its impact on spot prices. So indeed, in less than 1 day after the listing, users of FTX reported the price for Ample on the FTX platform shot up to $13,000 per token for one instance. Right? So here is a kind of nice funny tweet from little Owrat. It says, feeling broke when Bitcoin's 13,000, woke when Ampleforth 13,000. So we're gonna let's look at this. Look at this tweet right here. Yeah. So here, before we get into the investigation as to why, let's look real quickly at the chart. All right. So let's look at the. All right. So here's the FTX marketplace right here. For Ample perpetual futures, as we can see, it is currently trading at $2.05 roughly. So been relatively stable in this area. Now let's go to let's see here, 2. Yeah, so a good example here is at about 2 UTC. Oh, sorry, no, this isn't. So you can kind of see here where price was froze, right? Before this rally up to $2, and this is the perp future. Excuse me, this is the perp futures. Now let's look at. I don't know if here's the thing. I don't know if FTX has reset this chart or what's going on, but we can go to TradingView and let's look at FTX up until. This is about 7:10 a.m. UTC. So that's going to be about 2 o'clock in the morning for me. So 2 o'clock Central Standard Time in America. All right, so this is a pretty volatile market, right? We got this initial drop to $1 from $2.50, so that's a big move, and then some pretty volatile consolidation for what should be a stable coin. Go look at USD to USDT. Now, that is until, of course, this happened. So as you guys may be able to tell, I have replay mode on, and I'm going to hit the very next bar. All right. This is a 1 minute bar. This isn't done yet. There's that 1 minute bar. This has flattened price because that price right there of that 1 minute candle is 13,127. This is the price of Ampleforth in USD, the value of Ampleforth in USD on FTX. In 1 minute, it went from, oh, hold on, let's go back 1 minute. So price went from $1.789 and closed let's see here. Yeah, this is 687,187%. Congratulations, cryptocurrency. You've done it again. Now, soon after this, FTX CEO responded about the situation or commented on the situation on Twitter here, explaining that, quote, it was an error in the spot ample books for a few users. That's all that was behind the wild price spike. But come on, man, what really happened with the ample price on FTX that day? So as we looked into this, I want to point out that I mentioned this earlier, that FTX listed ample tokens for their trading through a perpetual futures contract, which tracks the spot price of the asset. This allows users to have both long and short exposure to Ample's price simultaneously, a process known as hedging. And while this is perfectly reasonable for most cryptocurrencies, as we've also explained this in great length, however, Ample is different because it has an underlying mechanism that has an embedded feature that causes supply to vary. And that makes its price somewhat predictable. Now, because the protocol is designed to keep the price relatively stable at around $1, when the current market rate is lower or higher than this target, the protocol inflates or deflates the supply of tokens on the market as an automatic rebalancing function, right? The other important thing to consider here is that thanks to the magic of smart contracts, this happens automatically on the blockchains every day at a specific time to UTC. So in other words, traders can easily predict whether or not the price for Ample will increase or decrease statistically based on its current market price at that time. And not only that, but because the formula is easily calculated, it can even approximate how broad of a movement price is likely to make come rebalancing time. And this is where it all gets dicey, because unlike FTX's spot exchange, which pauses trading during this 2 o'clock rebalancing period, the perpetual futures market on FTX was not being paused. It was wide open. And what this did was create a situation where when the price of Ample is higher than its target price, someone could easily go short on FTX's perpetual contract while also holding a spot position to receive the new tokens entering the supply due to this rebalancing. This way, traders on FTX could make money on the futures markets while expecting the predictable price correction and also still have their spot positions reap the rebalancing reward. So if we were to take a look at the first rebalancing of the Ample supply following its listing on FTX, we can see how price dipped on spot around 2 UTC as a result of the supply rebalancing once the exchange resumed trading, and futures markets followed suit, meaning anyone shorting Ample on the FTX futures markets around that moment in time would have profited on what was an easily predictable move. Now, as for that order book glitch that sent price to 13,000, it is unclear how that may or may not relate to this daily balancing mechanism. This price hiccup occurred about 5 hours later from the rebalancing. But in any case, it remains interesting to see how these kind of novel perpetual contracts are going to pan out moving forward, and whether FTX is going to encounter other issues with this Ample token being listed on its platform and being available on both markets, and having to contend with its underlying mechanism of daily rebasement. Now, I want to end this with just a slight piece of advice for those who might be foaming at the mouth on the idea of a brand new, guaranteed trading. This information's already out there. It took our team just a few minutes to realize the kind of the mathematical opportunity here, which means, by the way, that the rest of the market's figured it out as well. And so there is going to be a lot of competition over the trade. And unless you think you might have an edge in speed, I would not recommend you take this trade. Or let me say this, go forth, but with caution, guys. Go forth, but with caution. Hey, I'm rooting for you. With that being said, let me know if you guys have comments on this. Question about this is, first off, do you agree with our mathematical conclusion that this is a predictable price movement? And B, what do you guys think caused that order book glitch? And How many tendies did they get on that trade? That's the real question. Right? Somebody retired to Panama Beach today. All right. Thank you guys so much for the comments. We do randomly pick one comment winner per month to receive a free month of access to the Premium Trading Group Basic subscription. So make sure to leave those comments down below, guys. All right, let's go to and speaking of comments, give a nice comment about our let's just rain some coins here. Speaking of raining coins, have you guys checked out our partner, Spectre Security Coin? Fantastic project, good people. Honestly, one of the best laughs I've had in the last while. But seriously though, if you care about cryptocurrency, if you care about privacy, definitely stop by their website, see what they have to offer, stop by their Discord, see what they have to offer. Good friends of the channel, good friends of the team, and really excited to continue to see what they produce and put out there. What I would highly recommend is if you're an individual that wants to be engaging in cryptocurrency with best practices, talk to these individuals. These are people who build blockchains. These are people who understand and specialize in digital privacy, digital hygiene, and security. So you can get a free one-on-one consultation to kind of evaluate where you're at with your digital OPSEC and your digital hygiene, and they can help you make the improvements that you need to. You guys can visit them at spectre.crackingcryptocurrency.com and use the discount code GETCRACKING at checkout. You get a 10% discount. GETCRACKING. All right. Let's see. Activities coming up today. Nothing. No events today. I've got a few mentoring sessions. Now let's look at questions as time allows. Nope. Oh, that's the one. What's going on, Treese? Zebras. Let's see. Forex Meister is calling it a week. Good stuff this week. Later. Good to see you, my friend. Thanks for stopping by. Blockchain gains thinks that we honestly might be tapping the tipping point across most markets and ready for some more downside. Rick G says, pent-up summer demand won't be a sustainable balance. That's right. You got to be careful out there in them clubs. And Andrew, as always, with the fostering information here, says, don't forget to take your kids on vacation or camping. Go fishing, swimming, hiking, do some other fun stuff while you can. Unplug for a bit. Yeah, so I bought a new property, but I think what I need to do is, I was planning on doing it earlier this summer, but I certainly need to get it done sooner rather than later. So yeah, the fun thing that I've engaged in, so just to let you guys know, I love to spend time with my kids. We do a lot. I'm a pretty crafty person. So what I've done this year is slowly built or converted bicycles into motorized bikes utilizing a two-stroke engine. So there are kits that you can purchase online for this. The first one I built just with recycled parts from my garage. But I did order a better kit because I wanted a better gas tank for the second one. So ran out of lawnmowers and other things to cannibalize, go-kart parts and things like that. So that's been a lot of fun. My older kids absolutely love it. And yeah, and then we just hitch up the radio flyer and go cruising down the highway with the 2-year-old, so she doesn't miss out either. That's a joke. Mr. Wise, can you step out of the vehicle, please, sir? No, sir, it's not illegal to tow a boat in this state, but we do require that you put it on a trailer. Could you ask your friends to get out of the boat, please, sir? All right. Any coins worth one Satoshi? Okay, we already talked about that. ZEC USD K7 Jixer 1000. Zcash looks like it's about to make a sign of strength and move up to 130. So I have learned to not ignore K7 Jixer here. Yeah, I like Zcash as well. I've been talking about Zcash. In fact, Zcash was my last Money Monday. We've got the halving coming up in Zcash. Yep. So, Jason, touching on this as well, it's important to remember that you do not always need to be in a trade. Sometimes the best trade is no trade. Are their endothelial the mathematician lesson? Moonwalk. Have I heard of Unit Protocol? I have not. So this is the DeFi plug, Unit Protocol, COL. All right. Oh. I'm gonna put that on the list right next to the other two trades that if I would have taken would have gotten me wrecked. Let's see here, but not from you. So it's certainly not trying to put you in that COL. I'll check it out. Insane pullback on Algo BNB. A VeChain, yes or no? So let me take a gander. So we had, is our VPerp trade still open? This looks like it has been dunzoed. Check. No, I don't think so, actually. No. You know, VeChain is looking very much like Link. Link did not end up putting in those impressive, or very many, excuse me. We caught one eventually, but after two failed attempts, we did end up profiting net on Link on our Link perp trades. But we did take a long on VeChain perp on FTX. We have hit our first take profit on that trade. So our stop loss is at break even. So if price goes much further down from here, we're going to end up stopping out at break even on that trade. So making some money, not as much as we intended. I think that VeChain is likely to follow along with Link here. The more I look at this chart and seeing the lack of the follow through on this current rally to the upside, but it would certainly not be I'm not actively interested in looking for VeChain for serious continuation. I think there are much better opportunities on the table. For example, I mean, listen, we've put out a lot of signals, guys. So, you know, what's funny is I talked earlier about this perception or this feeling that I'm getting from individuals when I talk to them lately, because some individuals feel like I just need to be, on top of the market or just 50 monitors knowing everything that's going on. No, I just need to have conviction in my strategy and do what I do every single day, right? The worst thing that you can do is change your strategy that works and makes you money because something that you haven't seen is going on. Doesn't matter. Doesn't matter how big the candles are. It doesn't matter. It doesn't matter. It doesn't matter if Craig Wright proves he's Satoshi. It doesn't matter if if Vitalik tweets something. It doesn't matter if Justin Sun gets arrested. It doesn't matter if Warren Buffett likes Bitcoin or doesn't like Bitcoin. It doesn't matter what the European Union says about 5-AMLD. It doesn't matter what got delisted. It doesn't matter what got listed. None of these things matter, man. Fundamentals. Most fundamentals are absolute garbage because they're just words. They are opportunities for individuals to produce something of low quality, generally like a news article or a video, and get social validation, right? True, insightful analysis that is impactful and based on good research is very rare. It's very rare, and so you should honor it and enjoy it and appreciate it when you find it. And this goes for this goes for anything and everybody. The answer is and always will be, if you start doing new things because you got an itch to do it, and you saw some cool YouTube video and just going to go out there and make money, you're probably going to lose money, right? Because again, most of you, most individuals, I certainly did, most traders, when they initially get into trading, have a little bit of success, and then they start just falling on their face. Right? I blew 2 accounts before, and almost blew a third one before I sat down and began the path that would lead me to where I am today. Right? So, and again, I say this every show. It is not killer entries. It is not tips. It is not hot stock tips. It's not these asymmetric. It's not these gross asymmetric returns that pay the bills around here. Right? It is consistency. Always has been. It always will be. And I will. And listen, make you guys a bet. There's a way I can prove this. You just gonna have to be patient with me. I'm gonna be here trading, probably making videos, doing live streams in 3 years, probably in 5 years, most likely in 10 years, right? And a lot of the other people around that are doing the things that I'm doing, that we're doing as a group, providing signals, mentoring, providing education, they're not going to be here. They're not going to be here because they do not possess the qualities and traits of a professional trader. I had a fantastic, listen, so I talked to a former client of mine last night who is now an employee of a proprietary trading firm. And we had a nice conversation, and he told me a data metric that I found fascinating, which is about the best traders generally. What he noticed is that the best performing traders use the smallest position sizes relative to their capital and trade the least frequently. So the characteristics of successful traders are discipline, right? And consistency, and overall, like a heavy dose of conservatism. All right. Let's see here. Final questions before I get out the door. $5 super chat from Bob the Builder. The man, the myth, the legend. You are talking about yourself, my brother. Go to Mike's. $189 for an 80cc. And he has been back. Bob's been back testing while listening. Thank you, my friend. QLC exploded a couple days ago, but the whole movement has retraced. BPC are just another bust. Let's see here. QLC. So, huge volume spike at resistance. Generally a good sign of rejection. So I would be planning for a pullback from here. Maybe back to about 150 sats on QLC. But this is on the weekly. Let's go to the daily. Yeah, price hasn't entirely pooed the bed here. Yeah, I certainly don't see an entry here right now. Well, hold on. Let me rephrase that. I don't see a trending entry right now. I do see a possible BPC here. I do think you're interpreting that correctly. You might have already had your opportunity down here below 240 sats, but I would set a limit bid at around 220. I would really scrape for that entry over the weekend. I know you guys can't see the chart, but you do in your heart. All right, guys. So that's going to be Friday's show for me. Thank you guys for another amazing week. It's been a good week, and I know that we've had issues with being shadow banned here on YouTube and notifications not going out. So please help us out with resolving this issue with YouTube. Leave a comment down below after the show if you're watching. I'm about to end the stream. You can leave a comment right after that, and just say whether the notification for today's live stream was disseminated to you. If you have notifications on, note that. If you don't have notifications on, you should still get some kind of alert in your subscriptions feed. Go to your subscriptions page in YouTube and see if we show up. And if we don't, You may not know this, but like go to your subscriptions feed, see if we show up. The problem is we're not. So I think this is an unfortunate association with the Bitcoin scam live streams. So we are attempting to compile as much evidence as we can. So your support throughout this process is really appreciated. As I said, if you guys want to really support the show, then click on that button and become a member here on YouTube. We are going to be doing some fun stuff for you guys. You will get immediate access to our custom emojis and avatars and all the things that we have for our members. And we'll be doing some neat little things for the YouTube support, as well as for the Twitch subs. I love you guys over there. So you guys can support us on either platform. If you have Amazon Prime, you can support us for free over on Twitch. Let's see. Wanted to make sure I touch on. Okay. Make sure to join the Discord to stay up to date. Discord.crackingcryptocurrency.com, and all of our services that we offer: Premium Indicator Suite, Premium Signal Service, Community Mentoring, One-on-One Mentoring, our Online Trading Academy, and our Premium Discord community. All available, and you can learn all about that at premium.crackingcryptocurrency.com to see what we do as a company and join the premium community. We will be back on Monday. Look forward to some great Breaking Bitcoin bits and some content to come out on the YouTube channel over the weekend. Jack does a fantastic job with it. And overall, guys, it's been a great week. It's been very relaxing, very peaceful for me, very enjoyable, very profitable, and I'm really, really proud of the initial statistics that I'm seeing on the Online Trading Academy. We just recently launched its current implementation. Our flagship course is up and live on the Online Trading Academy, Pathways to Profit. And it's really impressive to see the tenacity and the drive of so many of our students. I mean, just tackling that content, filling up their spreadsheets, sharing it with me, talking about it. So just continue to do that. Do not lose that spark. I could sit here and tell you 1,000 times, but in case I haven't told you enough, I'll just say this very, very simply. The strategy that is outlined in Pathways to Profit produces consistently profitable trading systems. It will teach you how to build a unique one that is yours, and you will never have to answer to anybody else or listen to anybody else, or really pay heed, if you want to be a jerk about it, to anybody else's analysis, because you already have something that is consistent and that's yours. You own it. It's your work. You do the job of creating it. It works if you work it. And as I said, I have watched this year 3 students so far go to, and I'm not going to mention them because I got to be very, very careful when I talk about specific desks and firms because that is going to potentially imply recommendation. And I'm currently working on making this module for my course regarding how to become a funded trader and how to establish your own fund if that's what you intend to do, which I actually recommend over working for somebody else. However, some individuals are not going to be able to do what I did, which is, just grind for a while, save up the capital for a trading account and go from there. And again, I have a background and a current experience of trading others' wealth as well. So those options are always going to be there. The important point is, or the process that is critical, is putting in the work to have the results, putting in the work to have the system. And it is it's possible. Every single person in the premium Discord, you guys can have it. Log on to the Online Trading Academy, put the work in. And the people who are doing that, they're seeing the results. So, I will be back on Monday, guys. You have a fantastic weekend. Trade safely, be conservative over the weekend. But again, I think alts are poised to perform well this weekend. So if you want to do some, if you have a lower time frame or discretionary system, you might be active this weekend. But Andrew's got it right, man. Make sure that you spend some time with your family and enjoy yourself out there. You guys have a fantastic time. Position size responsibly, and I'll see you on Monday. Cheers.